What can you see in your screen?
DAX, DAX, and yeah,
Next, okay. Let me send this to Selvan in his email. So,
Yeah.
Selvan email. So, SEL Selvan Naidu. Yeah, sent it. So, DAX, what you can see? Bar chart or candle chart?
candlestick, candlestick.
You're saying candlesticks, yeah. Mm, okay, let me change it. Share screen. Oh, what is this? What was that? Yeah. So what can you see now? Bar or candle?
Bar chart,
Bar chart.
DAX bar chart.
Okay. That's okay. So Selvan, are you in?
I can hear you. Yeah.
Yeah. So you are in your computer?
I'm on the computer now. Yes.
Okay. Fantastic. Brilliant. Okay. So we'll start your question with your questions. So what is your first question? Mm. So we'll start off with our general financial product advice. NP Financials Pty Limited, NPF or NP Financials advises all service recipients of the following. This information is provided only on general financial product advice basis. This is educational in nature. Trading securities, derivatives, CFDs, and foreign exchange contracts can be risky and is not suitable for all. So please go through this, and we'll start the session. When you are done, let me know.
Yeah, yeah, good.
Okay, fantastic. Alright, so we'll start with this one, the one which we discussed. In the meantime, you can ask the questions, whatever you have. And in the asset class evaluations, okay, before that, before we go there, I think this is important. Yeah, how many of you have responded the ASICs paper, draft paper, either to your broker or to ASIC directly?
I could not. When I was offshore, I tried to respond, but I could not proceed. So I don't know how to do it actually.
Did you try through your broker or directly to ASIC?
To IZ actually, I tried with
Right,
IZ.
yeah. Actually, I think we have shared the email address for ASIC also, or through IG also. So both. We did both. You remember?
Yeah, yeah. I mean, but
Mm.
I was trying to do, but I could not complete that form, or I could not progress. Then I left it. So
Okay.
my registration is not complete.
Actually, you should do it. This is an important aspect of your trading.
Mm.
Because it is a draft paper, unless and until you are giving the feedbacks, so ASIC could not probably know what you want. So please try to log in. It's nothing to log in actually. It's just whatever you think. Read the draft paper And after that, whatever you think and whatever you agree or do not agree, and why you do not agree, why you agree, and so on and so forth, actually you should write them back. Either you write them back through Go Markets or through IG or through ASIC.
So is it a detailed question and answer session, or just
Uh, so
one click?
for example, Go Market has given us this.
Yeah,
So you can read this ASIC website here on their proposal, or you can
yeah.
start this survey here. Similarly, I think IG has also sent. So this is the ASIC consultation paper.
Yeah.
So you can go through this.
Okay. Okay. So how many slides are there, sir?
There are not many. It will not take much time.
Okay.
Yeah,
I could not. I did not try it on Go Market, but I tried on the IZ.
yeah.
Yeah.
So this is the paper. You can go through the paper, and they have actually come out with many ideas. Some of the ideas are good. Some of them are not. Possibly can be debatable, as we have debated, and we have raised our concern that if the margins are going up, then possibly the retail traders would be finding problem. So instead of increasing the margins, our understanding is uh, so these are the questionnaires which were there. The first one was we have agreed with the transparent pricing and execution. So on the draft paper, actually, you can read this. What does it mean? And we agree. Risk warning. The broker should give the risk warning. Yes, we completely agree. Prohibition of inducements. We completely agree. Binary ban of binary product. We completely agree. Real-time disclosure of overnight funding cost. We completely agree. Real-time disclosure of total position size. We completely agree. Negative balance protection. We agree, but it should be left. We have told them it should be left to the traders to declare to the broker. You may be comfortable with 50%, some may be comfortable with 75% margin closeout, and some may be comfortable with 25% or 5%, 10%. It means that supposing you have $10,000 and your portfolio risk is 10%, so 10% of 10,000 is 1,000. So if you are losing $1,000, you are saying that according to ASIC's draft paper, broker should close your position, all your position. So you are having $9,000 in your account. Otherwise, some can agree 50%. So that was our understanding. But for the but for the margin, we actually strongly oppose this. We do not agree to this. We do not agree to the minimum margin requirement, because if that is implemented, unless and until you people are participating, the more you participate, the better ASIC will come to know what is retail traders are actually. This is only for retail. This is not for wholesale or professional traders. So the retail traders will be affected actually. So for example, if we are if someone is trading one contract Aussie dollar, existing is $500. So if anyone is having $500 in their account, he can trade actually $10 a pip. One standard contract is $10 a pip. But now what ASIC draft paper is suggesting that he should have $5,000. So instead of $500, they are proposing $5,000. So for Australia 200 cash, now anyone can do $810. If someone is having $810, he can take a position of $25 a pip. But according to draft paper, it is going to go up to 10,805. So they are increasing 13 times for the index. For
Yeah.
the forex, they are increasing 10 times. For commodities, for example, crude oil, and supposing crude oil is tradable at $1,240 for $10 a pip, crude oil, but the draft paper says the retail investor should have 8,267. This is the margin actually. Margin requirement. You should have more than this. You should have much more than this. And Bitcoin presently can be tradable at $1,425, but the draft paper is suggesting 7,125. Similarly, 500 shares of BHP is now tradable at $890 margin, but according to the draft paper it will be 3,560 unless and until all the retail traders are actually participating in this survey.
Okay. So why they are changing this? Why they are trying to increase the margin amount? Is it because to lock in the traders?
You should go and actually you should go and read the ASIC paper on that.
Okay.
So in the ASIC paper, actually you
Yeah.
will come to know the answer to your questions.
Okay. Okay.
Yeah. But you should our concern is more and more retail traders should let ASIC know what the retail trader is thinking, so that ASIC will the very purpose of the draft paper is to invite the
Yeah.
retail traders to participate in
Yeah.
the discussion and let ASIC
Okay.
know what they may be thinking good for a retail trader, they may not be thinking what not according to their draft paper. So we have actually not only we are identifying the problem, we are actually suggesting an alternative proposal. So what
Uh-huh.
we are suggesting is restrict the trader from losing more than X%, which is our strict money management risk management tool, and
Yeah.
1% X can be between 1 to 5% for the portfolio. For the portfolio, it can be 5% or whatever it is, by
Yeah.
forcing the trader to put stop loss at X% distance from the entry price.
Yeah.
So if the trader is not putting the stop loss while taking a trade, the broker must not execute the trade. So this is
Uh,
possible.
mm,
So once placed, for example, someone is going long on, for example, someone is going short
mm,
on Aussie dollar, for
mm,
example, at 6800, and he putting a stop loss at 69.6900. So he should not be allowed to alter the stop loss to lose more money. That means if it is stop loss is 69, he cannot do it 0.6920, 30, 40. That's what traders do. They keep on
mm,
increase the stop loss. So that is a bad idea. So we have told them to restrict, and we are participating in many forum along with other consulting firm, with Deloitte, with IG, with Go Markets. So we are trying to place as much strength into our alternative proposal, so the industry can survive, retail traders can actually participate, and they can only lose not more than 1% or 0.5% because they are restricted. This is what our money management says for last so many years, and our traders are following for so many years. So this is what we are suggesting. So you can suggest your thoughts, and please participate. If you have a better idea, ASIC will welcome it and probably implement it. So
mm.
please participate and let them know. Any question?
Now, okay. Now I got an idea, so I'll try to
Yeah,
do it tomorrow.
please.
So when is the last date, sir?
Very soon, I think. Yes, I forgot the last date, but why should you wait for the last date? Just do
Okay.
it.
Yeah. 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 Tomorrow I'll do it.
Just do it today.
Yeah. Yeah.
If it is possible, do it today. Whosoever is broker, if he is under ASIC,
Yeah.
he would be probably requesting you to give the feedback and the survey. So please do it,
Okay. Yeah.
and that would be good.
Yeah.
Okay. So that was ASIC, and now we will do with the I'll ask a question. How many of you are actually taking advantage of our asset class evaluations which we are doing? And if we go to our traders breakout room, we are actually quite active because the market is active. and we are posting almost every single day. This is 4th of October, 2nd of October, 30th of September, 30th of September, so on and so forth. And on 2nd of October, we wrote the Germany 30 CAS Jacks 30 has printed back-to-back candlestick reversal patterns on daily chart with the 5 characteristics. So go through our analysis at asset class evaluation for indices. So if you see this in your mail, what you can do, you can go to this asset class and go to the indices. And we wrote here, this was the day when we were writing and price was at 12,248 at the time of our writing. And what we wrote, that this was the engulfing here. And on why that this engulfing was important, we saw actually 5 things. You are actually trained to see these 5 things. I don't know how many of you are seeing this. The first of all, this has appeared after an uptrend, because this is a bearish reversal pattern. So this has appeared after an uptrend. So that was the first context, and that must be satisfied. So if we want to see a bearish reversal pattern, it has to appear after an uptrend. So this is an uptrend because the peaks and troughs are going up. And second is, this has appeared at the top right hand corner of the chart. This is extremely important. So the reversal pattern for the bearish must appear at the top. The reversal pattern for the bullish must appear at the bottom right hand corner. Number 3, it has engulfed previous 4 days candlestick body. So 1, 2, 3, 4. So this has engulfed 4 days. And if you want to see the candlesticks, so let's see the candlesticks, which is here. So this was the date we are discussing. It has engulfed 1, 2, 3, 4. Four bodies are actually engulfed by 1. So that is extremely important. And then we wrote, it has taken out the low of the 4-day reversal bar. So what are the 4-day reversal bar? So this is 1 day, as you can see. So this is the first day, as price was from here. So this is the first bullish bar, did not close above the bearish bar. This is the second one, bullish candle did not close above the bearish candle high. This is the third one, bullish candle did not close above the bearish high. So 3-bar reversal. So this is 3-bar reversal, but the lows are not taken out, so we are not in the trade. This is the fourth one, and there is an arrow here. If this low is taken out, then we'll be possibly going short. So it has taken out the, so that's what happened, 4-day reversal bar. And then the fifth one is, it has closed below all the resistances. So if you see this one, and there are where is that, this one, and the resistance are where, yeah, if you can see here, there are so many resistances on top of it. 1, 2, 3, 4, 5, 6 or 7 resistances on top of it. So that's a kind of double top here at 12,500 whole number, and we have so many resistances at this point. So all these 5 points were satisfied, and it was so important, this one, because it is the strongest bearish engulfing, because it has engulfed the previous 4 bars. And sure, if this type of reversal bars you are seeing, that's a tremendous opportunity. And what happened the next day? So this was the day when we are writing, and what happened is, if this low is taken out, or the T1 is taken out at 12,142, it's this happened on the next day. So next day, on 2nd of October, Wednesday, market from here collapsed 391 pips. So anyone who is trading intraday with us, or short-term trading actually had a good day on these days. So this is how actually you can take advantage of our study on different marketplaces. So we are posting it, and please understand what we are doing, and you can take advantage of our study in the market. So we did on the DAX, and then we did for the Nasdaq. So Nasdaq, what we saw, go through our analysis asset class of indices. So because index is happening now, some markets actually move sometimes. Uh, so index market is moving now. Some maybe commodity market may be moving sometime, and so on and so forth. So what Nasdaq we posted on 2nd of this month, 2nd of October, that it has fallen 818 pips, that is 10.18%. So we wrote Nasdaq, after dropping 10.18%, has again dropped 4.143%. So if this is another one, and if you draw a Fibonacci from this to this, so this will be the maybe 88%.
So
Yes.
just
Yeah,
just a question.
go.
To trade this indices, so I should have completed first the indices indexed trading course.
Yeah, so that will help you.
Yeah,
That will
yeah,
help you in understanding better. So we posted on, we have an indices trading course which is for 3 months only. We posted that on 2nd of October. 2nd of October on this date. Yeah.
yeah.
So
Just could you just briefly explain me? So is it same like uh, the what's the main difference between index trading and the forex trading? The concept was is the PIP price is going to be increased, or the capital investment is more, or what's the,
no,
in terms of technical analysis?
no.
In terms of technical analysis, may not be much difference.
If that will depend on which index you are trading. PIP cost would be different, of course. For example,
Okay.
if we go to index and bond,
Yeah.
so for example, this is DAX.
Yeah.
Uh, we are actually trading DAX, and then if I have to go to the names, yeah. So Germany 30, and then Wall Street Cash, Hang Seng, and it will depend on your, the answer to your question is, it will depend on what instrument you are trading. If we are shorting this, so
Yeah.
shorting the maximum priced index is Dow Jones. It is 26,566.
Yeah.
But remember, all these are $1 contract. Yeah.
Okay.
So
$1.
yeah, so if DAX, so Dow Jones is moving in your favor 1 pip, so for example 26,566 to 26,567, of course the spread will be there.
Yeah.
So if it is moving 1 pip, you will get $1. Similarly, Hang Seng is $1 contract, Australian dollar, is trading
Yeah.
at 25,875. This is Japan, 21,534. And this is bond, this is Bund, not index. This is actually in a bond. This is China, 13,491, Germany, 20,000 12,063, and in India, 11,135, Nasdaq, 7,754. So that depends on which one you are trading, and
Yeah.
the calculation will be done on the notional value. So if you remember the calculation on the notional value and the margin and the leverage, so
Yeah.
you will come to know how much margin would be required for indices.
Okay. So what is the minimum stop loss to be? For example, normally on a forex, we'll have a minimum risk is about 300 pips. Yeah. So
No,
what
not
will be
really.
the roughly?
Not really. The 300 pips, whatever you are talking, is for a, I think, long term, like 2 days trade. Oh, we are talking.
Yeah,
But
yeah, true that.
if you are trading intraday or 1 hour or 4 hour,
Yeah,
the actually the uh, risk can be very less. For intraday, same forex what you were saying for $300 actually can be tradable with a risk of 20 or 30 pips. That this risk is actually dependent on the time frame you are trading. For example,
yeah,
if you are trading 2 days, the risk can be 180 or 150 pips. It's not fixed. It depends on our strategy. But if you are
correct.
trading 5 minutes or one hour, the risk could be very less. For example, for 1 minute chart, the risk can be actually 20 pips, 20 pips, 30 pips. So depending on what you are trading, for example, either you are trading.
So, for index trading, is it intraday trading or it's a 1 day or 2 days?
Hello.
Hello, the
Yeah.
index trading is
Yeah.
what is the time frame involved? Is it intraday or 1 day or 2 day?
Yeah, you can do both actually. Index trading is very well known for day intraday trading as well as end of day trading. So either you can select depending on your time availability.
Yeah,
You can actually select end of day or intraday. So if you are having time, if you are time rich, and the advantage of these markets actually. So for example, if you see ASX, this in Australian market. So if I change this to 5 minutes chart, the advantage of this actually, the markets are divided into time zone. Of course it is 24 by 5, but the advantage of this, what I'm trying to say is, the market in Australia actually opens at 9:50.
yeah,
9:50. So this is the market, this is the actual market opens 9:50, and market actually moves from this 9:50 to mm, 4 o'clock, 4 o'clock, yeah, up to this point. So if you see the movements of ASX for any day, let's see that Monday, Tuesday, whatever it is. So this is Friday. Let's take the worst case, 9:50. So this is the bar market opened here. Market came down to 25 pips and then went up 44 pips and around close there. But if you see, that is morning session, so that is for 65 pips. And if you go to Germany, that market actually opens at the 17 hours. So this is the 17. Till then
mm,
market will not move much. So market will not move much, and on the 17, this is the market open, as you can see. So this is the market opens, and then a market moved in a big way during the, this is of course non-farm payroll. So supposing someone is entering the market somewhere here or somewhere here, anywhere, when this hour 969 is broken, we have our intraday signal. When this 969 11,969 is broken, we took a profit here for 42 pips, and then we had a non-farm payroll, and we are done for the day. Non-farm payroll, of course, it's a different story altogether. A
yeah,
market can move in a big way. So these markets, to answer your question, are actually divided into which market you are trading. So if you are trading ASX, that will be in the morning. If you are trading Dow Jones, that will be in the night, evening or night. I think night. If you are trading DAX, it will be evening. Similar for FTSE, so on and so forth.
yeah.
Yeah.
So, what I understood mainly is intraday. Sorry, this one. Yeah,
Hmm?
this index trading is mainly intraday
No, no, no. You can do end of day. Of course, you can do end of day.
or
Um,
intraday or end of day. Not it's 2 day 2 day chart.
You can do 2 days chart. If you are that entire thing will depend on the what is the time frame you are having. Supposing
Okay.
you can only see once in a 2 day. So many of our clients are actually doing 2 days because they are comfortable with 2 days. So like this is end of day, and from this double bottom here, from 15th of October, when this T1 sorry P1 is broken, when this P1 is broken, so this is double bottom and this is P1. When this P1 is broken like this, when it is broken here
Yeah.
with a higher low, yeah, so after that there is no looking back.
Yeah.
So from here market moved 739 pips. So if our signal is coming around this point or around this point, so it will be a good end of day trading. Yeah,
Okay. Yeah. Yeah.
makes sense. Okay, so and so that was on our index. We did DAX and DAX. We also had a uh, price objective here, exact price objective which matched according to our 15th of September head and shoulder analysis. So this was the head, this is right shoulder, left shoulder, and then we had the price target at 12,476 on an end of day. This is end of day, and from 29th September till 12th of sorry 29th of August till 12th of September, it actually hit the target. So
So
that was
when you said end of day, is it a 2 day chart or a daily chart?
daily.
I
End
can
of
see
day
it.
means daily.
Okay.
Yeah, end of day. It means
Okay.
daily, day, end of the day.
Yeah. Okay.
Okay. And similarly, we did another analysis on the live cattle, if you remember. Live cattle, we did analysis on 11th of September, and we said that there is a possible crack and snapback here, and with 9,560, and that we did on 11th of September. And you can read what we have written. Live cattle is at its all-time low. So we actually did twice. We did on 10th of September. We identified 9,560 on a monthly chart, which was October 2019, and again on September 2019, October 2016, and this was no, September 2019. So after so many 3 years, 3 years, live cattle actually touched the all-time low. So that we posted on the 10th of September, and then 11th we said there is a possible crack and snapback happening because it cracked through the support and then again immediately snap back. So that was on 11th of September. So if we do live cattle, let's see what happened from 11th of September. So this was the day when we posted first on a monthly chart. Yeah. So in a monthly chart, this was October 2016, and then this is September 2019. So this is a double bottom, and we saw that, and we posted on a daily chart. We posted here that this is a same double bottom here. Yeah, 9,560 exactly. And we also noticing that the all sellers out bar is actually not stopping above the support. What it is doing, it is cracking through as if it is doing a crack and snapback. So it is cracking through the support as this case. So the support was 9,560 from October 2016 low. So this close was below 9,560. So actually closed at 9,555,555, and after that it took the low of this as if it is going down. This is a bear trap because we do not sell a support. We will never sell a support. And then this has happened on the very next day, 10th of September, and we wrote this, that this is a possible crack and snap back at a support which can have a tremendous effect. And after that, live cattle is moved more than 900 pips. So many of our students actually got it from here, 9560, 1413 pips, and many waited for this crack and snap back and took this one, and they are running a profit of 1201 pips. Questions? Did you take it? Why didn't you take it? And so on and so forth.
No, I could not take this because I was offshore. So.
Okay, what about Sylvan?
I don't trade commodities.
Oh, you don't. Okay. Okay. All right. So that was a tremendous opportunity there. And what else we discuss? Okay, one more thing we have nickel also we saw the all-time high. This is actually a student of us helped us to identify this. It did not do much, but let's see. Nickel. It was making all time. The problem, unless and until it's a double top or double bottom. Double bottom happened live cattle and it moved up to 1800 pips. But this is not a double bottom. That is the challenge. If it is not a double bottom or a double top, this is not a double top. Although it's a little bit of stretch there, it did not happen that way. So, the 18,805 was the was the resistance there, and now it is at 17,722. So not much, but actually it came down from that resistance after this low taken out, 185 pips. So that was on the nickel. All right, any questions?
This time I haven't prepared any questions, so I'm just whatever.
Okay, same thing happened on Euro Aussie. I don't know, 19th of 9th. So those of you who are trading Forex is up almost 100 pips from yesterday level after successfully completing the crack and snap back on daily 200. So if we go and do this Euro Aussie, and throw a moving average. Yeah, we posted that on 19th, I think. Euro Aussie 19th of the 9th, 19th of the 9th. So Forex pair Euro Aussie completing the crack and snapback on daily, so 19th of the 9th. So if we go here, This is 19th of the 9th. Yeah. So what happened there? So there was a crack here on the 200 moving average. This is the 200 moving average, as you saw. So I added that 200 moving average. So this is the 200 moving average. It played with the 200 moving average for 1, 2, 3, 4, 5, 6, 7 days. So it did not close. This is all sellers out. If we go bar by bar. So that day, which was 6th of September. So 6th of September was all sellers out at 200. 200 is a very strong one. And then this fellow is probably stepping like a morning star, the second candle of the morning star. So on 9th of September, and then it did not actually satisfy the morning star definition. Did it? Anyone?
No.
No, because this close has to be higher than the middle of this third one. But it did close above the 200. This fellow closed above the 200. So for the last 3 days, what is happening? Closing above the 200, closing above the 200, and closing above the 200. So these 3 days, it closed above the 200 moving average, and this is a crack.
Yeah.
It cracked through, and this is the snapback.
Yeah.
So it cracked through. Same thing happened. Same thing happened there also. If you can see this one,
Yeah.
it 200 is such an important. Yeah. So let's concentrate on this one. 11th of September it closed below, but 12th of September it closed above. So this is a crack and snapback, and if this high is taken out, and interestingly, this low would be matching. So let's see. Draw horizontal line at this low, and the low was at display price 1.5894. 1.5894, and if you have to do a zone of support, the zone of support would be around the close and open. So that was the minimum close. Yeah. So yeah. So that was 1.5926, and 1.5926, 1.5894. So this is the zone of support, and price exactly stopped between this zone here.
So now can I consider this one as a double bottom, sir?
This one can be considered as a double bottom. No, because this is
It's not
not
in the
lower. The
lower.
second one is not lower. The second one has to be lower
Yeah.
or
And
equal.
it's
You
not,
remember?
yeah. Plus, and it is not lower right hand corner as well. So it's only
Yeah.
the moving average support is taken.
And then what happened? We saw on 13th of September it closes above the 200. Again there was a possible crack and snapback. Cracked through the 200 on 16th of September. Snapback immediately. 17th of September, and then it went up. So if you are following our writing from this point, when this high is taken out, then you'll be up by 93 pips. So that was on the 23rd of September. Questions?
I, I have no questions.
Still one question.
No, no questions, brother.
Alright, so what we'll do now, we have done it, we are actually thinking, I don't know, it will depend on which response we are getting. What we are actually thinking to, because we trade all the asset classes, so we actually do scanning of the market before we can possibly take the trade. And what we do is scan the market, and then we color code the market, like Forex, for some time now. This would be probably the last discussion of today's. We are having Swiss franc as bullish, because it is in blue. Aussie yen is in short, and then sterling Aussie is in possibly long position, and Aussie Swiss is in short position, and Aussie is in short position. So on this date, so these are currencies, 1 2 3 4 5. So 5 currencies are in different. So let's do one by one. USD CHF. So let's do USD CHF and USD CHF. So let's delete this one. Yeah. So from this date till 13th of August till date, it is trending up. So that's why if you see USD CHF was in tile or blue color, and then Aussie yen, it was in purple color. So that means Aussie yen. Let's do this one. So this was yeah, this is in purple, and Aussie yen purple, and this is coming down, and this is impulsive corrective. You can actually draw, as you know, we can draw impulsive corrective. So this is impulsive corrective impulsive, and so there are three possible entries here. One was here, one was on this day 24th, and one was this 26th. Another one was on the 3rd of October, just day before Friday. But we could not, or we did not, we could not take this one. Why? Because who can tell me why? Why the last trade on this one is not taken? X, 3rd of
So
October. Hmm?
it's at TP, bullish
No, no,
TP.
no, 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 no. We have not seen this one. We are discussing this.
Must be Fibonacci.
Yeah, so that's correct. Fantastic, Sri, brilliant. So this was the day which when the so the if we this is the last stop, and prior to this one, if we go here to here,
If it is a Fibonacci 38, then that's,
yeah, then the Fibonacci was at 78.6.
yeah.
So on the 78.6, it was all sellers out bar at 78.6, all sellers out bar, and next day it actually on this date the question was whether to sort or not, because these 3 days 1 2 3 did not close above this. If you see one by one,
So just question,
yeah.
why you started? Sorry, is it the lower what is it called TP? Now the bottommost is at the long at the 26th. Yeah,
Hmm?
is it the lowest point? Can we draw the lowest point
From here,
to the? Yeah, yeah.
We generally
From
don't
there
do
to,
that. We go to the previous one. Yeah, we can do. We can have a confluence.
yeah.
We can have a
Then yeah,
confluence.
from there probably that is 61 point.
Hmm. So, yeah. Mm, if we do the Fibonacci display percent, yeah. So this is 61.8 and so on and so forth. So you're talking about, can you see the blue bar or it is too much?
Maybe you can leave the background white on it. Yeah, okay.
That's good. So this 3 at 38.2 means nothing because it was not closing above. So once it cracked through the 38, and then from our Fibonacci we can say this is one bar reversal because this close was not above this high. This is one bar reversal, two bar reversal because this close was not above this high. Three bar reversal, this close was not above the high. But if you taken this one, you cannot take this one because it is running at a loss. And this happened next day, and this happened next day. So all the trades, three or four trades, whatever you have taken, are in profit. And then next day it comes. So in this case 61.8 is why here as 3 is suggesting. But what we do, we take this drop and go to the next drop and drive Fibonacci. That's our consistency, and we got a 78.6.
Yeah.
So if, yeah, nothing is wrong or nothing is correct, only correct thing is, uh, as we say, there is no long side or there is no wrong side, long side or short side or wrong side or whatever it is. There is only correct side, and that is the market side. So whatever is the market doing, if you are on the direction, then possibly you are on the. So if you have Fibonacci confluence, so that's a beautiful example. Those of you who are practicing Fibonacci, which is powerful, very powerful. We can take the unwanted one. So 78.6 is there, and then 61.8 is there. Yeah. So both this support Fibonacci confluence actually gave us, this is not a good short, although there was a possibility, but we did not take it because we are selling a support. We must not sell a support, and that's what the next thing happened. Let's go to next one, which is GBP AUD. GBP AUD is in blue color. If you click, that will be yellow, but if you see here,
Yeah,
this is
yeah,
blue color.
yeah.
Yeah? So that was blue color. If you go to this blue color, so we identified that this is a low uptrend, an impulsive corrective. So you can take this trade, you can take this trade, and so on and so forth. And next one was Aussie Swiss. That was actually no color. So no color means it has actually changed the trend. So that can be one observation of this trend identification, because we are doing so many things on the trend identification. Uh, so we are seeing, uh, yeah. So we are
So on
go.
sorry on this also IUD AUD CHF.
Hmm.
Could you bring back the chart? Yeah. If you could draw, is it on 19th of July to the 6th of August, 19th of July to 6th of August.
What Fibonacci?
Fibonacci, please. Yeah, Fibonacci.
Yeah.
That is 16.8. Yeah, so,
So
yeah.
that's yeah. Crack and snap back on here. So we're trying to because this is $1 million question. But we are trying our analysis based on whatever you know, and we have taught you. EUD, up bar, down bar, PT, peaks and troughs. P stars, T stars, that's a long term trend. So UD is the short term trend or immediate term or first term trend. PT is peaks and troughs, that is the intermediate trend or the second term trend. P star, T star is the long term trend or the third term trend. And we also have it can break 1 but cannot break 2. That means it can break 1 peaks or troughs, peaks for going up, troughs for coming down, but it cannot break 2. Of course it can break 2. If it is breaking the second one, that means there is a possible change in trend.
Reversal.
Yeah, we remember all those things. And then very important one is bullish. All those are important, all these are important actually. A very important one is bullish bar closing above bearish bar and high taken out. So if the bullish bar are closing above the bearish bar, especially in a monthly or weekly chart, or even 2 day 3 day chart, it can be important. And 1 day chart also very important. Bearish bar closing below bullish bar and low taken out, then we consider that the trend is getting weaker. And close above support and high taken out, that's a possible long start. Close below resistance and low taken out, that's a possible short start. And break up an important trend line. So if you drawn a trend line on a weekly or monthly basis and that is broken, that's a possible start of a trend. And market structural patterns, as we saw, candlestick reverse candlesticks for DAX, powerful bearish candlestick we identified. Double top, there was an example we discussed was nickel. Double bottom was a brilliant example which was discussed on the form of live cattle. Head and shoulder was discussed on the Germany 30 and the yeah. So all these things can actually identify a trend, and one of them or the absence of one of them can actually weaken the trend. For example, we see P star T star going up, PT going up, everything is good, but all of a sudden a bearish bar is closing below the bullish bar. That means what? The trend, the strength of the trend actually getting reduced. So weakening, yeah. So yeah, sure. And let's see, Aussie. Aussie, we thought it was actually in purple. It is, yeah, sure. It was still in purple, and because it was going down, so this is impulsive, and then this is corrective, and then this is impulsive. And for 3 days, it did not close above this one and close above this one. Yeah. So we have three bars did not close up. But the problem with Aussie now is probably is this double bottom. The double bottom, which we are probably not take these trades. Yeah. Similarly, we had for the futures, CFDA, China was in a downtrend, as you can see. So it was having a tremendous move here, then a double top, and again price is falling down. Yeah, we had natural gas, oh sorry, high grade copper, which is in a downtrend. Yeah, so this is down, impulsive, corrective, impulsive. So this way we are trying to identify as much as possible. We had soybeans in blue. Yeah, that's going up, very good.
So just a question on that email. So after doing all this technical analysis to identify the tradable instrument, we need to scan. So what exactly that means?
After scanning, you will identify the possible trend, because that's $1 million question. What is the trend? Once you know the trend, then you can go to the strategy. As we said, that if you are going 4 hour If you are seeing the, I think we gave example of Aussie dollar, because that was in short. So this is short Aussie dollar. This is
So
short.
what I'm trying to ask, sir, what does the scanning task involves?
Scanning task involves identification of a trend, or the identification of a possible trend.
Correct.
Hmm. That's what. So once you understand the trend, you can do it yourself, or you can take advantage of what we are doing, and you can actually match and verify. And if it is matching, then you can take it. That is good. Like Fibonacci confluence, for example, this one Aussie was in purple, and in a purple, that is short, we had a sample setup on Monday 30th of September 900. So this scanning has helped us to identify that this is a short trend, and our 4-hour strategy has generated a sample setup. So this two giving us a confluence that the trend is down according to our understanding, and we are taking a short trade, according to our strategies. So that actually confluence, and that's it generates it improves the probability of success, or it makes a trade more probabilistic in nature. Any other question?
So this scanning, I mean, you'll be doing it a daily basis or weekly or monthly or depends upon the instrument.
For our trading, we do daily,
Okay.
and we primarily also do 4 hour, 1 hour, and intraday in 5 minutes chart. So that this trend which we do scanning stays there maybe for a week, for months, for many more time. For example, market is market, and it can do anything and whatever it
Correct.
does. So
Yeah.
for
Yeah.
example, crude oil, we do not actually. So crude oil is going down from this date, which is 17th of September. So last 15 17 days it is going down. So this is the one which is going down. Yeah, and we saw a double bottom here. So we are selling from here, which is 18th of September and then 19th of September, and there was no opportunity there. So two opportunities here, 18th and 19th. So this is one market. So every market is different, and like this one from here till this point, 500 pips, 500 pips in 10 days. So this is a tremendous trending, and it all happened because of whatever happened. Uh, so yep. So market being market, it can change a trend. For example, DAX can be a short term in a small duration, and it can reverse. But generally speaking, what we are seeing is once identified, actually they can stay. Like for example, corn. Also, we have given a trade idea. Corn we identified here that it is possibly going to go up on 13th of September according to our scanning, and we took a trade, and then it generated three more trades. So this way you can take advantage, or you can do your own and mix and match, and so on and so forth. So any question on this new features which we probably might uh, give away, because it's a humongous job we are doing for our trading. So if it is helping you, then only we'll say this. Otherwise, if it is confusing you, and that is, yeah, no point. Make
Yeah.
sense? No other question? Yeah, so we have discussed whatever we had to discuss, and we come out with three or four major topics. We talked about ASIC draft paper, and we
Yeah.
think that every retail trader should actually let know what ASIC, what you retail trader is thinking, and agree or not agree with ASIC draft paper. Number 2, we talked about the asset class evaluations we are doing, which is happening almost every alternate day in commodities, in forex, in indices. So you can take advantage of that. And the last thing we discussed about identification and scanning of the markets. So any questions?
No, I have no questions.
So if you do not have any question, I'll let go because you have your festivals.
Yeah, yeah.
And all the best and take care. Bye for now.
Thank you very much. Thanks, Salman. Bye.
Thanks.
Thank you.
Thank you.
Thank you,
Thanks.
Father. Thank
Thanks.
you.
Thanks. Bye.
Bye bye.